Right, time for today's Bart Chart. Is the 5-year junk bond rally over? That's my question today. This is the Bloomberg Global High Yield Corporate Bond Index from 2010. This is the price, not the yield. The price, not the yield. Now, up until recently, it was on track for its 5th annual increase. That's since the series began in 2010. That's the left-hand corner of your screen. Junk bonds, as measured by the Bank of America Merrill Lynch Index, have risen every year since 2008. That year, by the way, junk bonds sunk by 27%. Now, as of today, the Bloomberg High Yield Index is down by 1.6% in 2014. In December alone, it's dropped 3.6%. That's the worst monthly performance in 3 years. More than $80 billion has been wiped off the value of junk securities in the last month, since reaching an all-time high. See that yellow circle? On July the 9th, the index has sunk by 7%. Average yields have moved a long way in just a space of a few months. In June, Bank of America Merrill Lynch indices show they fell to a record low of 4.92%. Average yields right now are above 7%. The shift has been stunning. The words of James Camp. He's a portfolio manager at Eagle Asset Management, and he goes on to say, if history is any guide, it's not at all clear that things will just snap back. Now, one of the reasons why we're seeing this big shift in high yield is the movement in the price of oil. Energy company bonds make up about 10% of the global high yield market, and investors are shunning the debt on concern that oil prices below $60 will precipitate defaults. And it's bonds that are issued by energy companies that are bearing the brunt of this sell-off, down 12% in December. That's interesting, according to Bank of America Merrill Lynch data. But don't feel too down for junk bond investors. As I said, since 2010, we've been on a long rally. It's been quite a run since the end of 2008, as I said, according to Bank of America Merrill Lynch data. Since then, junk bonds have returned 143%, despite weak periods back in 2011 and 2013. But has the 5-year junk bond rally come to an end?